Good evening and welcome to our Cows and Chaos Feed, Forage and Management Strategies webinar series. My name is Dean Dick. I'm a Farm Management Specialist at the Ag Info Center, and I'll be moderating this webinar. A couple of things before we get started here. First is that this webinar is being recorded, and you will receive a link to the recording in tomorrow's email. So you'll be able to, if you miss something, you'll be able to go back and take a look at it. Also, these webinars are being posted on the Alberta Agriculture and Forestry YouTube channel, so you can look at any one of them that's been in the past here. So the other one is on questions. So on your GoToWebinar control panel, you should see something called questions. If you have a question, please type it in, and we will ask our presenters at the end of all their presentations on the questions. So we have three presenters tonight. We're going to talk about effective culling with Andrea Hanson, the economics of depopulation with Ted Nibourg, and we're going to have a bit of a market outlook with Jason Wood. So with that, I am going to turn it over to Andrea for her presentation. Andrea.
Thank you, Dean, and welcome to the 6th installment. So we've had 5 before this. As Dean said, I'm Andrea Hanson, and I'm going to touch briefly on 2 points that producers should ruminate on when considering their winter feed supply and how to ensure it is optimized. Okay, oh, there we are. Okay, so I'm going to talk about 2 considerations to optimize your feed resources this fall and winter: culling cows and early weaning. If you've decided that you need to reduce your herd size this fall to match your feed supply, developing a culling strategy would be wise. The first group of animals should be those freeloaders who are eating up your feed and not producing something in return. Depending on when the bull was turned out with the cows, you may be able to check as soon as now. Vets who use ultrasound can usually detect a pregnancy earlier than doing manual palpation, which should be able to be done as soon as 40 days. Keep in mind that the minimum days depends on the vet's experience and comfort level. And certainly knowing sooner than later gives you the most flexibility when it comes to market decisions. Once a manager knows what females are pregnant and which ones are open, decisions can be made as to when to market them. The advantages to preg checking and selling soon after means that the funds are available sooner and the cows aren't eating any more of the valuable feed. The drawback to selling early is that the fall cow prices are typically low. And this is something that Ted and Jason will be getting into later. If the cows are preg checked and held for a while, it adds weight to the cows and avoids selling into that lower fall market. This could be an important step if the cows are thinner and you want to put some extra weight on them. Open cull cows don't require the same level of nutrition as their pregnant counterparts, so often the managers can utilize some cheaper alternative feeds to add that weight. And it would be important for those culls to be separated and fed differently than the rest of the cow herd. To get a clearer understanding of the options available to you, the Beef Cattle Research Council has a very good decision-making tool that I would recommend you check out. If you go to the BCRC site at www.beefresearch.ca and under the resources section, choose the decision-making tools and then scroll down to the economics of pregnancy testing beef cattle. By clicking on the View Interactive tool, it will open that tool up. Using your own numbers for your operation, it will provide you with the decision targets to work from. There is also some links to, there's also some links to more information if you'd like to consider options further. So, just a moment here, I have to go back. No, I don't. Okay, sorry. Once the open cows are determined, culling criteria for further reduction depends on the operation's priorities. Invariably, I swear the cows who are the most difficult to deal with will never be the ones that are open. And I'm being a little bit facetious with that, but under some of the truth is actually underlying in that statement. The priorities depend on the goals of the farm or ranch. This is the way I would prioritize culling standards. Someone else might have a list in a completely different order or with some extra criteria. There's no right or wrong, it just depends on your objectives. What's most important that it prioritizes a list, and it's developed to provide a process for reducing the size of the herd strategically. For any commercial cattle producer, profitability of the operation depends on the goal management indicators, and that is G for growth of the calves, O is for the open rate of the cows, L is for the length of the calving, and D is that death loss. In a commercial cattle operation, the pounds of calf weaned to cows exposed to the bull is the benchmark. Any cow that is not pulling her weight by raising a calf needs to be culled so she isn't eating up the profits of that operation. Remember that feed expenses can often add up to 2/3 of the cost of a cattle operation, so anything that we can do to lower those feed costs is going to positively affect the bottom line. The next point I want to talk about is early weaning. Weaning calves early reduces and changes the requirements on the cows so that they need less to maintain their pregnancy and maintain or increase their body condition score going into winter. Weaning calves at just over 120 days or 4 months is considered early weaning. In a 3-year study that was funded by the Alberta Beef Industry Development Fund, 3 stages of weaning, and that was approximately 72 days for the very early weaned, 132 days for the early weaned, and a typical normal time is about 192 days. And these were evaluated to determine the effect on the cow and calf performance as well as the economic implications. So here's what they discovered. As long as proper management and nutritional needs of the calf are met, early weaning did not increase the morbidity or mortality rates in the calves. Adopting a preconditioning mindset prior to weaning will get the calves settled quicker and reduce health issues. Preconditioning would include vaccinations before weaning and a booster at separation, using a low-stress weaning method such as nose flaps or fence line weaning, and once the calves are separated, ensuring they're settled and eating and drinking well. So I'm going to take a moment, and before everybody falls asleep, I'm going to get a little bit of audience participation. And what I'm going to do is put up a poll question and ask for your response as to what you do on your operation to at weaning time. So I'm going to see if this is going to work. Did that launch? Dean, would you mind doing it?
Yep. Yeah, I can do that. No problem.
Thank you. So there's a number of different choices there, and if you could choose all the responses that would be applicable to you. So there can be more than one choice for this poll.
We've got votes coming in. We'll give people some more time here. This is good.
Okay. Okay, so far it's looking like okay.
We want to give it to a minute here.
What are we at for time?
55 seconds.
Okay, well, sure. Then we'll be done.
Okay, we're gonna give it a little more time because I see some more people are trying to vote. And okay, we're gonna close the poll right now.
Okay, all right, perfect.
And we'll share it.
Okay, excellent. So the poll results are that about a third wean the calves and ship them right to market at weaning time. 17% vaccinate about 2 weeks ahead of pulling the calves from their mamas. 33% vaccinate before weaning, and then again after separation. 67%, and this is great, are using a low-stress weaning method, such as nose flaps or fence line weaning, and 67% also keep the calves at the farm for a couple months to get them fully on feed before they ship them. So, and I'm gonna maybe hazard a guess that those that are keeping them for those 2 months are probably also those ones, because they're exactly the same percentage, are doing the low stress weaning method. Thank you for participating. That's just good information to know. So now getting on with the weanings, what the weaning study found. Management and feeding of the very early weaned calves is best done in a confined feeding situation. So you really want to make sure that they are getting on feed, and it is a really high quality feed. The younger the weaning age, the higher the energy and protein levels will be required in the ration. Due to the rumen capacity, very early weaned calves will need more grains to meet their nutritional requirements. If there is adequate high quality pasture available, early weaned calves, and that's over 120 days, can be run on pasture and have comparable performance to normal weaned calves. Sorry, okay, last point. The study followed the calves through to harvest, and what they found was the calves weaned at 120 days or more had comparable finished weights, carcass qualities, and yields to normal weaned calves. The very early weaned calves had reduced carcass weights because they finished sooner, but there wasn't any adverse effects on the carcass quality, grades, or yield. And before I leave the slide, I do just want to emphasize again the importance of that preconditioning protocol to reduce the stress on those weaned calves, and especially if you are doing that early weaning. Weaning early provides the flexibility to target the feed supply for a strategic approach. Even when the calves are on the cows, their nutritional requirements are increasing. So often, you know, we are maybe going out and supplementing those pastures so that the cows and calves are getting higher quality feeds. So the interesting part about weaning early is if those same cows were no longer milking, their nutrient requirements would diminish, freeing up the high quality feed for those calves. So maybe one of the most important points on early weaning for a cattle operation is what it does for the cows. The very early weaning of the calves reduce the grazing pressure and the needs of the cows by 25%, and reduce the nutritional needs for energy and protein by 30% or more. As we go into the fall, pasture qualities and quantities are diminishing and may not be providing the level of nutrition needed for those calves, let alone what the cows need for lactation while maintaining a healthy pregnancy. So weaning the calves early also gives the cows a chance to improve their body condition scores for winter. And I believe Ted is going to cover more on that part when he gives his presentation next. But I think it is something that you should consider, especially if your pastures are getting to be a little bit lower in condition now. So effective culling of cows by preg checking the herd to know which ones are open is the first start to fall herd and pasture management. Pulling those open cows off and managing them differently saves the higher quality feed for the pregnant cows. If further culling is needed, there are a number of criteria to choose from. Developing a prioritized list will ensure a strategic process is followed. Another way to optimize resources this feeding season is to consider early weaning. Calves over 120 days of age have shown to not be affected by early weaning. Be sure to use a preconditioning protocol. Even more impactful are the savings in feed for the cow herd. Early weaning of calves reduced that grazing pressure and the needs of the cows by 25% and reduced the nutritional needs for energy and protein by 30%. That takes a lot of pressure off those tired pastures and targets the feeds more specifically. So that covers my part tonight, but just on another note, there are a lot of great resources out there for information and support, and I would encourage you to check out these resources. Don't forget to look after yourself and your family. When the stewardess goes through that speech on the airplane and she gets to the part about the oxygen masks, we're told to put our oxygen mask on before helping our dependents. And I think the same can be said for your farm. If you're not looking after yourself and your family first, the farm's not going to be able to work well for you either. And as a final resource, every farmer and rancher in Alberta should know about and belong to your local forage and research association. These associations are great sources of information at the regional level. Become a member of the association closest to you, and I'd even encourage you to become a member of more than one. You won't regret that small membership fee. All the best this fall, and may it be a productive one.
Thanks, Andrea. We're going to take a minute here. I'm going to pass our presenter off to Ted, who's going to here we are. There's Ted, and he's going to talk about the economics of culling. Ted.
Well, thanks, Dean. Good presentation, Andrea. I'll just try to follow up along with that. So tonight we're going to talk about the economics of culling. The primary reason behind culling decisions on any operation, of course, is lack of profitability. If the herd isn't profitable, if the cows aren't making you money, it's maybe time to send them to town. There's a number of reasons for culling, and they all relate to the profitability factor. Open cows, that's of course a given. And what I'm going to assume in tonight's presentation too is that the cost of the preg check that Andrea was alluding to is will be a sunk cost, and so I'm not going to factor that into the calculations that I'm going to perform a little bit later. Another reason for culling is the poor performance of the late calvers. And for each time a cow is not bred during a 21-day cycle, it can cost up to about 39-40 pounds of weaning weight, and for 6 weights weighing, priced at about $2 a pound. That's $2 a pound. That's an $80 reduction in profit. So those poor performance late calvers, they're maybe not. They're still showing some profitability, but not as much as they could. They haven't met their potential. Age is another factor, and it's likely the predisposing factor for the above culling reasons. Old cows have a greater tendency to be open, have difficulty rebreeding, and often wean smaller calves. They're the ones with the bad udders, the bad feet, things like that too. And Andrea, I'm gonna say one thing about the disposition of the cows. You might want to keep some of those old cranks around just to keep the animal activists away from the farm. And that might be one reason for keeping some of those cranky old growers around. The last year and a half, feed costs have probably been one of the biggest reasons for culling cows. If they're not making money because the feed costs are so high, it begs the question whether the whole operation is profitable. What I'm going to follow up with that is what's actually happening to the Alberta's cow herd, and this is some numbers over the last couple of years, and basically starting from last fall, last summer, when we experienced the extreme hay prices, feed prices, high barley prices that definitely affect the profitability of the cow herd. On an earlier presentation, I had mentioned that about 8 cents a pound for hay was a break even for profitability for a cow herd in this province, and we certainly saw hay prices higher than that last year, and they definitely affected the bottom line of a lot of producers. The Stats Can numbers for Alberta, the January 19 numbers, and that's basically January 1st of 2019 compared to January 1st of 2018. Our cows were down 1.4%. Our replacement heifers were down 2.3%. That was just for this last winter. Now, we go into July. The July 1st numbers are out. Just about 2 weeks ago, they showed up. Our cows they doubled, 2.8% down from previous July. What's a bigger concerning factor was the replacement heifers dropped just about 7%. So that tells me that we're not in the expansion phase in our herd at all. We're in the contraction phase, and that's going to have some bearing on, I think, feed costs. If the demand is down, supply is static, price will usually go down with it. Again, if the supply is down of calves, hopefully the demand is the same or up, and we can expect some higher prices for our calves. When we're talking about the culling of cows, it's impacted by price seasonality, just like any other marketing concept with cattle. D1 and D2 prices typically drop from about the first part of September, about now, to mid-November. And that drop averages about 15%. On the plus side, though, the prices tend to increase from mid-November to about the end of March, first part of April. And that increase averages about 27%. I pulled September 10th ABP report for D1 and 2 cows in central Alberta. They came at 75 cents to 92 cents. I have a little bit of difficulty with that. I think the 75 cents was probably the D3s, D4s. As a matter of fact, I looked at Vold Jones Vold's Pinoca prices for yesterday. The D1s, D2s were in that 84 to 90 cents, and the D3s and 4s were 75, 83. So I'm suspecting that 75 cents was actually the D3s rolled into that ABP report. Okay, we have to make a decision when to cull, and I think probably the biggest decision leading up to culling is some of those factors that Andrea was talking about earlier. You know that the open cows are the ones that go because they're not being very profitable. So we're going to make some assumptions here. We're going to take a 1,200 pound cow in the fall, and you know, she might be, we're probably talking about a 1,500 pound cow when she's in good condition. She's lost some condition. Maybe she's in the part of the province where the pastures weren't all that great, feeds were a little bit short. Maybe she's weaning some great big calves, and but she didn't rebreed, so she's just a little bit on the short side in terms of condition. I'm going to use that high price, that November price, use a 92% discounted 15%. That gives me a price for that third week in November of about 78 bucks a hundredweight. Conversely, what I'll do is I'll take that increase of 78 cents and increase it 28 or 27%, jumped up just about $100 a hundredweight. Go with a 140-day feeding period. That's kind of typical. That'll put us into that February or that March period after we've decided to give her time to feed. I'm not going to consider yardage costs in this. I'm going to make the assumption that you've got to feed the rest of the herd anyways. You've got to have the power on. You've got to have water on. You're probably going to have to spread manure. Maybe you know, for those cows that you're going to cull, we're assuming that there isn't going to be much of a yardage charge. Let's assume those cows will gain about 1.43 pounds per day. Typically what we see with cull cows, the poorer condition they are in, the better their gains are going to be. It's a compensatory gain, basically, okay? And so in that 140-day period, they should be gaining about 200 pounds. We're going to feed them about 30 pounds a day. That's about 2.5 pounds, 2.5 times their body weight percentage. Pricing that hay or that green feed or whatever at 7 cents a pound. I think that's kind of what's going to be an average price this year. I do know that Dean and I have been handling calls on feed prices, and to my experience, I think prices are tending to soften a little bit. So hopefully they might not even be that high. So we've got a cost of production. The 1,200 pound cow at 78 cents, and I'm going to call that 936 an opportunity cost. That's what you could have received if you'd sold that cow in the fall after you'd weaned the calves off, just in that November period. 140 days at 210 a day, just about $300 for feed costs, or total cost of $1,230 bucks. Market value when you sell her in the fall, or in the spring rather, she's a 1,400 pound cow now at 99 cents or $99 a hundredweight, 99 cents a pound. She's $13.86. So that gives you a profit of about $156 a head. So that's one scenario, and I'm kind of hoping that Jason will kind of go into where he sees the market for this fall and what we're expecting next spring too. So if this kind of scenario meets your needs, it might be an option for you to look at. I'm going to look at the pessimistic side of the situation now. We're going to assume that cow was had some pretty good pasture, and she didn't lose that much condition. She's open. She's going to be a cull cow. Maybe she didn't wean that good a calf, but she's in pretty decent condition. Be a little bit conservative on discounting that, and I'm going to assume that she's about, because she's a little better condition, about $87 a hundredweight. And given the fact that we're starting with a higher price, we're going to give a premium of about 10% on that. So the March D12T price is $96 a hundredweight. 140-day feeding period again. And like I mentioned, those cows that are in better condition are going to be gaining less. Their compensatory gain isn't that great. They're basically going to be trying to maintain themselves and just kind of holding their own. Don't have a lot of net energy for gain. They don't really need it. So she's going to have a little bit of reduction in her gain, 140 pounds gain for that feeding period. Same feed cost, 30 pounds a day at 7 cents a pound, 210 a day. Cost of production, again, that opportunity cost, you could have sold that old girl for $1,131 that fall. So one of the things we also have to consider with some of this too, and is the tax implication. If you start marketing all your cull cows, or a good percentage of your cull cows at the same time you're weaning your calves, you're going to have a higher tax problem, little tax liability if you market before the end of December. So if you're marketing in that March period, it gives you a little more flexibility in terms of manipulating your tax situation. Same, about $300 a day for feed costs. Total cost $1,425. The market value, that girl's at 1,400 pounds. Again, she only gained 100 pounds. 1,344. One of the things I've got to caution too at this same time, we're assuming that cow is getting marketed as a D1 or 2. If she's putting on way too much weight, there is a distinct possibility she could drop down to a D4, which will be discounted quite heavily again. So even though you've got this cow, this D1-2 cow being sold at $1,345, that could be quite a bit different than if she was a D4. We still lost $81 a head, but if she dropped into that D4 category, she might be even worse than that. So one of the things that I did find recently when we start talking about these scenarios, some research that CanFax had done on one of their presentations was that 55% of the producers will sell their cows, cull their cows directly after weaning. So more than half of the cull cows go right after weaning. 15% of the cows will be going through that feeding period and get marketed in that March, first part of April period. Another 10% will be culled after calving. That's what time you find out whether she even is, whether maybe she aborted a calf, maybe slipped a calf, something like that. Maybe she wound up with a stillborn, a dead calf. Who knows? So they 10% of them get weaned right after calving. Another 20%. Their criteria for weaning was some other time. Who knows? It could have been some accidents. Just fed up with the cows in particular and decided to get rid of them. Disposition might be an issue. Some of those cows, when they get cranky, they're just a little too hard to deal with, and the producer will tend to want to send them to town. We've got some additional resource. I think Andrea mentioned the Beef Cattle Research Council, BCRC, has an online calculator to help with profitability determination, and that can be found at this URL. And this is just a quick screenshot of this is their basic model. They've got an advanced model too, but this is a basic one, and this is a typical herd of 100 head. You can see that they were a little bit more optimistic with the fall cull cow price. That's quite a bit higher than what we're experiencing right now. Again, they're going to be letting those girls go in March. They're estimating $1.30. This is on their example, for example. And again, 140 days. They must add some pretty good cows, gaining about 2 pounds a day. So with that, I'll leave it to Dean to turn it over to Jason.
Good. Thanks, Ted. Excellent presentation. So while I am turning the presenter off to Jason here, just a reminder for those of you who joined a little bit later, if you want to ask a question, please use the question box on the GoToWebinar control panel, and that way we'll read them out at the end of Jason's presentation. So with that, we'll turn it over to Jason, and he'll talk about some cattle market update. Jason.
Perfect. Thanks, Dean. All right. Good evening, everybody. I'll jump right into the market update here. So what I'm going to cover today, there we go. I'm just going to have a quick look at US and Alberta Fed Supply, where the feedlots are at right now, and how that compares to previous years. Do a little bit on markets, talk a little bit about futures and local pricing and where basis is sitting. Basis levels are pretty strong across the board right now. Then I'll have some slides on current feed grain costs, and then just redid the winter carrying cost for carrying a cow over the winter, just based on the lower feed grain prices that we're seeing right now. And then an outlook on where markets are potentially for the rest of the year, and then even into the first quarter of 2020. So on Fed Supplies here, you can see for Alberta, we had the August 1st cattle on feed report. We had about just under 798,000 head on feed. That's the 15th consecutive month that it's been above year ago levels. And this is the fifth largest August since reporting began. On the placement side, placements were down 9%. And placements have been below year ago levels for the last 3 months. And in the first 7 months of this year, so for January to July, there's only been 2 months where we actually had placements above year ago levels. So we had 5 months where placements were lower, and that's going to have an effect on marketings. And I'll talk a little bit about that in a minute here. On the marketing side, marketings were up 7% in August. And that's why we see that cattle on feed number dropping. And marketing's just based on how placements have been going over the last number of months. We're expected to see those remain above year ago levels for the remainder of this year. Now, with the lower placements coming in here over the last few months, that is going to affect first quarter 2020 for Fed supplies. And we could see those tighten up. And if we see those Fed supplies tighten up, then there's a potential for that to have a positive impact on price, and also lead to, and also give us a stronger basis level on the fed cattle side. One thing that could go against that, of course, has been in the news here about a month ago. The Tyson, Kansas plant had the fire there, so currently they're not slaughtering any cattle. They were a plant that was handling about 6,000 head per day. And they have opened the plant up to do some cutting, I believe, but I guess the kill floor from what's been reported is what's been heavily damaged. So its best case scenario is that will open up back in January. So with that plant offline, there's a potential for that to affect us up here if cattle being shifted to other Tyson plants down in the US. We could see some of our cattle that typically are sent down there under contract. They could stay up here, which could have a negative impact on our price up here. Looking forward on placements, with the one thing I want to touch on which will affect us going forward, not only this year, but in the next few years. Ted had mentioned there on our July 1 cattle numbers being down for beef cows. That's also affecting our calf crops. So our calf crops is down, and that in turn reduces the available feeder cattle in Western Canada. So for July 1st of this year, the estimate on feeder cattle outside of feedlots was down 4% from 2018, and it's one of the lowest numbers by a long shot since 2000. And for July 1st, that number was right around 4 million head. So it's decreased significantly. And even in the last 10 years, it's probably lost somewhere around 1 million head. So if we look at US Fed Supplies here, for August 1st, they had just over 11.1 million head on feed. And that's pretty much on par with last year. It's less than 0.5% higher than where we were in August of 2018. It is 8% above the 5-year average, so we do see, numbers remaining historically high down in the US as well. Placements were lower down there as well for July, they were 2% lower year over year. And that decrease in placements feeds into the good pasture conditions that they were having, but we're starting to see those pasture conditions deteriorate in a few of the cattle feeding areas down in the south once you get into Texas and down through there. So they're anticipating that without moisture, we will start to see those feeders come into the market, and also that'll feed into Cull Cow supplies as well. For August, it's the 4th month with lower year-over-year placements, and again, that's going to affect that Q1 of 2020 Fed supplies. So we could see tighter supplies, which means should be a boost on the price there. And year-over-year marketings were up 7%, very similar to here. Just a note on, I talked a little bit about packers there on the Tyson plant, but if we just look sort of at an estimated margin, I guess, for packers, when you look at Alberta and US packers right now, they're very much in the black. That Tyson fire had a big impact on the futures market and sort of live cattle prices. At the same time, cutout values for beef jumped up as well because it tightened up the supply initially there for a few weeks on box beef, and that's given packers that are operating right now, their margins are very black. In the US, they're estimated somewhere between $400 and $500 a head. Not so good up here in Alberta, but estimates would still put them somewhere likely between $200 and $300 a head right now. That Tyson plant, just for a little bit of background, did represent about 6% of the fed cattle packing capacity in the US. A lot of those cattle have been picked up, but there's going to be a certain drag there, and that could put pressure on feedlot currentness over the next few months until that plant gets back online. And if we do see that currentness drop down, then we could see those cattle back up, which could have an effect on prices as well. So if we look at Alberta, this is estimated feedlot margins for yearling steers in Alberta here. Margins have been negative for about 18 months now on yearling steers. This is a cash to cash basis, so of course there's no risk management in here. But it does give an indication of, when you're placing that animal and looking at the futures market on that day on a live basis, on a cash-to-cash basis, there is losses there. And even on the projected side, when they're placing them against the futures, there's still losses there. So there's a lot of betting on the market, the forward market, and then also using programs, risk management programs as well. So margins, for example, for yearling steers finishing in September were estimated at negative $212 per head. That's $212 per head. And then projected margins for yearling steers placed in September that would be finished in February of 2020 are estimated at negative $324 per head. On the feeder calf side, just to give a little background there, margins for calves finishing in September were $242 a head on the negative side, and they're projected at, they're pretty close to break even for September. This is going into a May 2020 finish date. They're projected at negative $6 per head. So there is some, margins are definitely a lot better on the calf side being placed compared to the yearlings right now. Feed costs are helping out, but that ongoing volatility in the futures market continues to have a real impact on prices. And just an example of how volatile the futures are, they bounced this week about $3 to $5 on the live basis, and I think the feeder futures was up as well, $3 sort of on average in the front months here, and that was just based on a release out of China that due to African swine fever there, the consumer prices are starting to skyrocket, which has kind of been something that's been in the background for quite a while, but now it's actually being made public. And that was enough to give the cattle futures a bounce this week. And then today it took off in the hog market as well. So now if we look at markets here, we're just going to look at steer calves first. So as of last week, steer calves were $219.50, or just over $1,200 a head on a 550 weight. Year to date, we've been averaging about $221, and that's about $1,215 a head. Year to date basis, our prices are down about 1.5% from 2018, and we're about 10% below the 5-year average. There's been strength in the last few weeks here. You can see on that the last 2 weeks prices have jumped on feeder calves, and that's been a lot of strength in the basis there. And that's just partly relates back to not a lot of volume through the auction so far on calves being available. And so that basis has jumped trying to get some of those calves in to be placed. So there's still an opportunity forward looking for softer calf prices, but it's really going to depend on when they come to market, and then of course where that futures market is sitting at. If we look at yearling steers, 850 weights, they were $1.93 a 100 weight, or about $16.40 per head last week. Year to date, those prices are averaging through 2019 at $182 a 100 weight, and that's about just under $1,550 a head. So prices are pretty much, year to date basis, are pretty much on par with 2018. We've had a lot less volatility this year compared to 2018, and then comparing this year to the 5-year average, we're down about that 7% as well. If we look at where feeder steers are going to go, typically on a seasonal basis, we see them increase about 2% into September, and we've definitely seen more of that. And when I was looking at numbers from the webinar that we previously did in July on Market Outlook, yearling steers are actually up about over 11%, about $20 a 100 weight from July, and a lot of that is just on strength in the basis levels. Just on basis there, over the last 8 weeks, about 2 months, which takes us back into July there, basis levels are sitting at about $16-17 over, and that's about $14 stronger than where we were a year ago. And if you compare that to the 5-year average for the same week, that's usually at the 5-year average, we've been $1 to $2 under for last week compared to being $16 to $17 over. So there is a lot of strength there in the basis, but it's also an area that has a lot of volatility too. So on to slaughter steers here. So this is Alberta slaughter steer price. Last week was $1.40 a pound, and that works out to about just under $1,900 a head for a 1,350 pound steer. Prices on a year-to-date basis are down about 2% from last year and down about 7% from the 5-year average. Now on here you can see those 2 blue dots. That is the projected Fed price for Alberta based off the October and December futures. You see that? Yeah. And so with those prices there, you can see how much that basis level really is pulling prices up. Basis was $9 above last year and $10 above the long-term average for last week, and that basis has really come a long way from the start of the year when we were $22 under. So that projected pricing puts us into the 120s, 130s for the remainder of the year. But again, with that basis level, we could see those prices stay up through the rest of the year. And again, looking back to July, Fed prices have dropped about $10 a hundredweight since July. Now on to Cull Cows here. We've got last week's price, as Ted was mentioning. We were at the provincial average was just under $89.50, and year to date, cows are averaging just over $88 a hundredweight. So cow prices have been pretty steady, and for the most part through 2019, they've been steady and overall pretty good, considering some of the volumes that went through earlier this year when we had dry conditions. Seasonally, we typically see that Cull cow market move lower from into November, and that's usually about 11% decline, and then we'll see about a 3% jump on average into December. So depending on when those cows start to come to market, we'll probably likely see that price start to decline here. So that would put us somewhere in the mid 70s for November on a Cull cow basis. But of course, you know, there's some other factors at play in there that could affect that. You know, beef demand remains strong, but then we're also seeing a lot more pork produced and chicken production as well in North America. So that could affect that cow price as well as we're seeing typically in the fall here, beef demand pull back somewhat, which usually follows with weaker grind prices. Last week, our market here for Cull cows was just about $6 over the U.S. market, which is pretty good because a few weeks ago we were pretty much on par. So we've regained that premium to the U.S. market, and the other positive for the Cull cow market is that imports of grind, which would be typically coming Australia and New Zealand, are big suppliers on that. That's down about 10% combined between those two countries in the first half of 2019. So that's giving us some price support as well. For Cull Cow movements here, this is based on data that's been available from January to July of this year. So you can see that for 2019, the big push that we had in the first half of this year puts us, since 2000, there's only been 3 other years that have been higher in the first 7 months, and that's 2002, 2008, and 2010. Right now, we've had just over 194,000 head, and that's 5% higher than where we were last year. So just to touch on auction volumes here, I mentioned earlier about how the basis is being supported, just waiting for those feeders to come to market. For the 2018-2019 marketing year, we had just under 1.5 million cattle move through auctions. That's down 7% from the previous marketing year, and that 7% is about 112,000 head. So in 2017-2018, we had just over 1.6 million Alberta cattle go through the auction. And for that first week of September, which was last week, we had just under 27,000 head recorded, and that's up about 14% from the first week of September last year. But we are still seeing volumes reduced compared to a year, you know, over a period of time there, they're still down. And just to give an example there, when the moisture conditions improved and started improving in June there, for July and August, those auction volumes, we actually saw them drop about 48,000 head compared to the year before. So we did that summer rain really did help. Now on the export side, this is live cattle exports to the US. Right now they're up about 18% overall, so just over 491,000 head on a year-to-date basis, and that's up till the end of August. But those volumes, while it's up 18% from last year, it's still close to 10% below the 5-year average. So when we break that apart there, we see feeders are up about 10% year over year. Slaughter cattle, and this includes cull cows, is up about 25%, and bulls are down about 1%. So on that side there, I looked at the last few months of data that was available through Stats Canada's database, and you could kind of see, pick where some of those slaughter cattle were going, and a lot of them are going into Washington and Utah, which would suggest to me that that was Cull Cow movements heading down there, and then a few smaller numbers going into Colorado, which would be feeders. So on the slaughter side here, for Western Canada, slaughter's up about 6%. We're about 1.4 million head so far this year to the end of August. And this is where we see our cow numbers. You know, not only would we see increases in live exports, but we've also got slaughter numbers on cows are up at 6% in Western Canada. Heifers are up 5%. And then steers are up 7%. Across Canada, we've got the same. We're up about 5.5%. So far year to date, we've slaughtered about 2.11 million head in Canada, and cows are up at 4%, heifers are up 6%. So that plays into that lower year-over-year numbers that we're seeing in beef cow numbers, and then also the lower heifer retention numbers that have been repeated for a number of years now. In the US, slaughter's up about 1.6% year over year at 21.5 million head, and we'll likely see that start to pull back with the loss of that plant. And from estimates, it looks like they'll still be up, but it'll be less than 1% by the time the year is over. So on our export side, we all know on June 25th, China's market became temporarily closed to Canadian beef and pork exports. Prior to that, we were seeing exports of beef into China up significantly. So year to date, on a value basis, our beef exports to all countries are at 1.84 billion, and that's up 24%. And our quantity is up about 14.5% at just under 254,000 metric tons. Our top 5 exports are the US. Year to date, on a value basis, we're up 18% into the US. We're up 59% into Japan. Hong Kong, we've seen a decrease on beef exports of about 9%. We're up 12% into Mexico, and China, we are up 207%. But that's gonna, as we continue to see more export numbers, and the longer that this drags on, that number will of course fall, since nothing's moving into China. During that time, those few months, China beef exports to China were roughly 80% frozen boneless products and 18% offals. And on the import side, beef imports into Canada are down about 16% by volume, and that's where we see those decreases out of New Zealand and Australia, and then also out of the US. We were down about 15% out of the US on the beef import side. Just wanted to touch on byproduct values here quickly, because they do make up a portion of the packer margin. We can see that values bottomed out in June, and they've made a small recovery of about a hundredweight here over the last few months. And we did see a significant increase in exports of beef offals to China in June. But since that was closed on June 25th, during the month of July, for which data is available, we actually saw beef offal exports up 9% into the US year over year, and 184% into Mexico when we look at July. So there is between the lines, you could maybe suggest that products moving through Mexico. I know that is something that's been suggested on the pork side, but nothing proven. If we look at offals just over the last 5 years, so from 2014 to 2019, we've got about a $54 decrease in that offal price. So that takes $54 off the table to the packer, which also impacts our live cattle price. So I wanted to just touch here a bit on feed grain prices. On the barley price here, we've got barley prices sitting at $235 a hundredweight into southern Alberta last week. Barley prices are come down from about $300 in the third week of June. So we've seen those prices really soften quite a bit. And then that just keeps, it's also being supported by decline in other feed grain prices, such as feed wheat into Lethbridge is at $240 last week, and that's down from $286 in June. On the forage side, we can see forage prices. Now this is a provincial average of reported forage prices, so there's good and bad in here. And prices have softened just sort of on a reduction in supply concerns, but quality remains quite a concern, and that'll likely factor into prices here as we move forward. The provincial average for July was just over 8 cents a pound, about 8.5 cents a pound. And on a year-to-date basis, we're still about 20% above where we were in 2018 and about 47% higher than the 5-year average. Now, if we compare our feeding advantage to the US, we can see for Lethbridge barley versus Omaha corn, we do see those values coming down. So you can see the drop there in barley prices has actually been more significant than the decline in corn prices. Year over year, barley's decreased about 9.5%, but corn is still about 16% above where it was at the end of August a year ago. So corn still has a way to come down, but barley has reduced quite a bit. And what this means is that we're actually also seeing our price differential as that decreases. It means that our cattle feeding in Alberta, we can sort of see that economic advantage starting to gain. And this also means that we'll likely see, that economic advantage of importing corn starting to fade away as that barley price keeps coming down. So with the decline in feed prices, I redid the cow-calf feed estimate, and this is just based off of 175-day average feed ration. And when I had done this previously, it was well over $500 a head. Now with the decline in costs, it comes out at about $480 a head for feed, and that also includes bedding. And again, if we, there's a lot of variations in there depending on what winter weather is and stuff, but that cost has come down just on those lower feed costs. When we look at sort of breaking down the operational costs for a cow-calf operation, this is based on agri-profits data that's collected through Alberta Agriculture. Feed and bedding typically accounts for about 41% of total operational costs, pastures about 33%, labor 5%, and then fixed costs just over 7%. So now moving on here just to do the look ahead, where are we going from here? So this is the outlook. So this is just, these prices are based off of the futures market, and then of course the forward exchange rate, and then historical basis levels, and then also considering seasonal price patterns in there as well. So there's a lot of factors at play, and these prices definitely could change significantly over time, but this is sort of at this point in time where those prices are. So on the Fed steer side there, you can see we're at 140 last week. And when you look at the futures, we're in that mid 120 to 130 range through the fall of 2019 here. We are dealing with those capacity constraints in the Fed market. There's also a lot of trade uncertainty, and then we're going to see that beef demand sort of move seasonally lower here. But those strong basis levels are, right now are keeping prices supported, and packers are looking to keep product moving just based on where margins are right now. So when you look at that basis level, you know, that brings us back into that 140 line there for right now. When we look into the first half of 2020, right now projected prices are sitting in the high 130s to the mid 140s, but still, depending on where the futures market goes and other factors there, we could see those prices will vary as well. On the yearling steer side, we were at 193 last week. Now there is that potential loss of currentness in the feedlot market that could affect both the yearling steer and steer calf prices moving ahead. But right now, based off the futures, we're looking in the high 160s to the mid 170s. And then if we look into 2020, we can see that those prices for the first quarter there still are good, averaging in the low 160 to low 170, so a bit more range there. And of course, we've got strong basis levels, and if those basis levels are retained, then those prices will be supported as well. On the cow side, right now we're at just, you know, that $89 last week. And, you know, if we follow that sort of seasonality, and then also looking at the typical weakness in trim prices, that'll also pull that price down. So we could see Cull Cow market into the mid 70s through the fall here. And then of course, you know, on the steer calf side, we were at 219 last week. And, you know, that calf market, you know, it's still going to see support from lower feed costs. But there's still that potential on when those calves come to market and how many come to market, which will affect that price this fall. If we look into 2020, calf prices are still, you know, fairly close to here, a little bit more strength projected about 205 to the mid 210s. And that big wild card that's affecting, you know, not only hog markets, but also cattle markets, as I suggested earlier, there is China. And depending on whether or not, you know, some sort of trade deal comes in place, we get our issues with China resolved so we can open back up into that market. These will all have a big impact on price depending on what happens there. So just to close out here, as I've talked about currentness in the feedlot industry there, and then slaughter capacity. We've got high utilization down in the US right now. So just depending on where that capacity goes and if that utilization can be continued. And then our Canadian herd, we've got our imports of fetal cattle there. We've got ongoing consolidation. The US has finished expansion now. They're now going to move into that liquidation phase. So we'll see a lot more cull cows coming to market. Of course, African swine fever continues to spread rapidly throughout Asia. That's giving a potential beyond China for import or for exports to other countries. Meatless substitutes. There's been a lot of talk about alternatives to meat. That market seems to have some growth potential, or appears to have some growth potential, but how much that'll be, we'll see here over time. And then of course that volatility in markets. And then there's also some questions on the strength of the global economy overall here moving forward through into 2020. So with that, we can wrap up here and take any questions.
Thanks, Jason. Excellent presentation and overview of the market. We're going to bring our other two presenters back online here. We don't have any questions right at the minute, so we're going to give people a little time to type in a question, and if we can get Andrea and Ted back on, unmute themselves, then we can. There we go. Thank you. So while we're waiting for questions, anything else, Andrea, that comes to mind that you'd like to emphasize out of your presentation?
I guess the big thing that I would like to suggest is certainly some of these pastures, we had a really tough year last year with some poor growing conditions. It was improving this year, but I don't think we're out of the woods yet with our pastures. So I think it is something that, yeah, there's some grass out there, but it's really important that we do look after those pastures so that we've got them for our future too. So utilizing some of these tools to kind of take some of the feed pressures off your operation, I think would be beneficial.
Perfect. Ted, do you have any comments that you'd like to make out of your presentation?
Well, I think the only take-home message I'd like to give producers, and it's something I think they're probably well aware of anyways, is that you know, the Cull Cow, their Cull Cow sales, they'll amount anywhere from 15 to 30% of their income. So it is a significant component of their income from their cow-calf operation. I think it's something that they really have to take a good hard look at, and you know, some of the variables that occur with trying to manage those Cull Cows. Of course, I think the biggest variable, of course, is feed costs. That's going to be have the biggest impact on their decisions.
Okay, very good. And got a question here, and this probably is for Jason here. How do cattle feeder imports affect our fall calf price?
That's a good question. A lot of what's being imported over the last little while has been Holsteins, which have been typically being imported, from my understanding, at a lower price. Of course, they do take longer to feed out, but just given the decline that we're seeing in calf crop, it is definitely a factor of competition. But I think those feeder imports are just filling the decline that we're having in our calf crop as we continue to see our cow numbers decline.
Okay, good, thanks. We're gonna wait just probably another minute here. Oh, he said this is just a comment, is no fighting for cattle for bunk space then. So, that's what that's our comment, his comment. So and we'll just give another, like I said, we'll just give another minute here for questions while you know, and because I mean, all of the presentations were really good, lots of good information. I'll just make note here that if you know, you can you'll receive an email tomorrow linking with a link to the recording of this webinar. And also, like I mentioned before, we are recording these and they get posted on the Alberta Agriculture and Forestry YouTube site. So go on over to YouTube, you'll see all of the previous other ones. We're working on the last one yet, so just hold off on that one. And the last comment here I'll make, and just waiting for questions here, is that there's a survey at the end of this webinar. So we really like your opinions, what you liked about this webinar, any other topics that you'd like to see on future webinars. So I don't see any more questions coming in, so we're going to close off the webinar for tonight. I'd like to thank Andrea, Ted, and Jason for some excellent presentations. And our next webinar is going to be September 26th. The topic for that evening will be feed testing, what's important and why. So we look forward to having you on that webinar as well. So with that, we'd like to thank the presenters, and we're going to close off the webinar. So thanks very much. Have a good evening.
Thank you. Thank you, Dean.
Thank you. Thanks, Dean.
Thank you.